This is Tom Aspray with the Viper Report. This is part 2 of my favorite chart formations, the topic for my Wealth 365 presentation in April. And I hope you decide to sign up with us, and you'll get 55 more minutes of this, as well as some other technical tools. Well, NEO has been a real popular stock this year. It had some great moves, and it has some really interesting continuation patterns throughout the last summer or so. So you can see it had a nice little downtrend here. It had a really good run to the upside. After breaking that, ran from around 2 up to 5. Then it made up corrected back down about, a good portion of that. Also formed a triangle. Then it was off to the upside again. I've extended the chart. You can see it really respected the 20-day exponential moving average nicely. We paused a little about 6. We paused a little about 7. Shot up to almost 15 bucks, I think, here. Yeah, 15.73. Pulled back down to about 11.5, 11.38. Formed another little flag formation here, and then it was off to the races once more. After peaking out around 20 bucks, I guess, it had another little flag formation. Next stop was over 28. And eventually into 42. That's the area I want to look at right now. When you overlay the Stark bands, you can see that in September we moved outside the Stark band. Okay, high risk buy, low risk sell, consolidated almost for the entire month. Another push above the Stark plus bands in October, about a week long, 8-day setback. Another huge push to the upside. Okay, we got up to 54.20 up here. Okay, so we're getting lots of warnings. Up here was this kind of wide-ranging bar usually suggests that you may be closer to a top. Okay, so we look at the technical studies. You can see that the volume was really good coming up early in the rally, but of course we got this big reversal day. The volume was the heaviest in the past couple of months. That was not a great sign. The monthly pivot levels did a pretty good job. You can see we exceeded both the R1 and the R2 here in November. Pulled back briefly, shot again to the upside here. Made a significant new high on, I guess it was right before Thanksgiving, November 24th. So you had another high here that was above the weekly Stark band. And more importantly, there were some technical. The volume here was quite low and declining as prices moved higher. And more importantly, the MACD histogram started diverging. So a pretty good divergence here. It took the signal and MAD lines didn't cross until a few days after this. But, after that spike high and lower close, this was the time to bail. You can see that for the next month, the monthly pivot R1 was at 61.26. So what happened next? When I teach people chart analysis, I'd show them this and say, okay, so what are your ranges now that we look like we've put in a short-term top? And I would hope people would look back at this area right here, which corresponded to the R2 in November, which was 39.29 area. So, this was resistance. Once resistance is overcome, it becomes support. Okay, so we pulled back, got below the Stark band. So that was the initial area. Headed in December, we got a rally up to the pivot, but was that a buying opportunity? I don't think so. Since the MACDs are negative, the volume is even weaker on the rebound. So that sets up a stage for another pullback. And just those last minute buyers, got washed out a little bit. We dropped back to 40. And then once again, we're off to the upside here. The MACDs are not turning positive yet. So, but now they're showing a much more interesting formation. And you can draw out, once again, a typical continuation pattern. This resistance there, support down in that 39 area. So after we completed this little flag formation, one close here was pretty neutral. That was a good day to get in. If you weren't in already, you were trading right around closed at 48 or something. So you're probably looking at a 55 or a 60 strike price. The flag formation had even higher targets in the 70 area, but I usually try to determine targets in a number of ways, and the 1.272 resistance was more in the $60 area, and you can see that we got up there just over a week later. Gapped higher here, but then closed. We had opened at 64.95, hit a high of 66.99, and closed at 62.70. So a couple of days after that, that's when I would have bailed. No real sell signals here from the technical studies, but they were deteriorating. Volume was not impressive. And as you can see, that was part of a further correction. We looked like we were trying to bottom out here in February, but that failed as we moved back below the pivot here. That was not a very good sign. Broke some more support and got even down to the March pivot support S1 here in the early part of the month. Well, I hope you have an opportunity to sign up with us for the Wealth 365. In addition to me, there are quite a few other excellent speakers, and many of you probably have attended their conferences before. They do a really nice job, and I'm in the process of working on my slides right now, and I look forward to having some different things to share with you in that presentation, and I hope you can participate. Also, there will be, for those who sign up via this email, then you'll be invited to an after presentation session probably in the first week or so of May, where I'll look at some current markets as well as answer your questions, and I'll send you a reminder. So hope you have a great weekend. Thank you very much.